We have now officially broken the record for the longest economic recovery period in our country's history, as in this is the longest time we've gone without a market correction. Just check out this article posted by CNBC. Oh wait, what's that, Nick? What? The article was released on July 2nd. What year? Oh, 2019. Huh. Hey, what's going on, guys? Daniel here, one half of the Kwok Brothers, and in this video we're going to address the fact that yes, we are currently in a housing bubble, and additionally we are seeing growth in the housing market that is absolutely not sustainable. And yes, we will eventually have to face a market correction. But of course, this brings the question, well, how big of a housing bubble are we actually talking about here? Are we talking about those little ones that we blew as kids, that we frolicked in the playground? Or are we talking about like the Guinness Book of World Records sized bubbles here? Now at this point, some of you guys might be saying, well, Daniel, didn't you make a video last week about the housing market and how you think it's going to be a slower decline as opposed to a giant crash? Because if you're wrong, then every single one of your friends are not going to think that you're cute.
How do I reach these kids?
Yes, my friends, I still believe / hope that the housing market will eventually correct itself in the form of a slower, healthier decline as opposed to a giant crash, especially with all this artificial cash that the Federal Reserve continues to pour into our markets. But this video, we're going to be talking about, well, how big of a housing bubble are we actually talking about? As in, how much trouble are we actually in? A big crash or a slow decline is ultimately how the housing market will respond to this bubble. All right, now that we got that done, let's go ahead and talk about the data in terms of what our housing bubble actually looks like. And well, to help me measure those metrics, I recently read an article written by Ray Dalio. Now guys, if you don't know who Ray Dalio is, he's pretty much like the guy, like the Snoop Dogg of measuring big debt crises. As a matter of fact, I would highly recommend that you guys all read his book. It's a 3-book series titled A Template for Understanding Big Debt Crises. In this article that Ray wrote, he actually outlined 6 basic questions that give us an understanding of asset bubbles. So without further ado, oh, and by the way, don't forget to smash the like button. You guys already at this point know how this thing works. So without further ado, let's go ahead and start with question number 1, which is how high are prices relative to traditional measures? If we look at the data of this year compared to last year, we can see that the median home sales price has gone up 14.3% year over year. Now guys, here's even crazier data. In the month of February, 36.1% of all homes sold were at above listing price, which by the way, guys, is 14.4% higher compared to the same time last year, while only 6.9% of all homes were sold at a discount, 4.3% lower compared to last year. Now, obviously, a big reason for this is the record low inventory that we've been seeing in the housing market. But just how low is it? Well, to sum it up efficiently, we're seeing 17.3% fewer newly listed homes for sale as this time compared to last year, along with a whopping 49.6% drop in number of homes available for sale. 49.6%, guys, as in almost half of what's normal inventory is what we're seeing currently in the market right now. And it's not just comparing this year to last year. We've actually been seeing this to a lesser degree for a while. Now guys, there's only been one other time where housing prices by ratio have been this high, and well, you guessed it, it was 2006 and 2007. And this brings us to question number 2, which is, are prices discounting unsustainable condition? Now we all know that our housing prices are extremely high, but let's go ahead and check in with how our economy is doing. Because currently we have almost 3 million Americans that are still in mortgage forbearance. Nearly 20% of all renters are behind on rent, with the average renter being behind $5,600, equaling about 4 months. And of course, this isn't mentioning the millions of Americans who face permanent job losses, along with the multitudes of businesses that have closed permanently in the year 2020. So I think we all know what the answer is here for question number 2. This brings us to question number 3, which is how many new buyers who have not been previously involved have entered the market? Well, according to the National Mortgage Professionals, in 2020, an astounding 2.38 million Americans entered the housing market as new first-time home buyers, which is a 14% increase compared to the previous year's same time, which was 2019. So not only do we have new home buyers entering the housing market, but according to the same source, we actually broke the record for the most amount of new first-time home buyers entering the market in a single year. I think we all know what the answer is to question number 3, which brings us to question number 4, which is how broadly bullish is sentiment. Another way of asking that is, are there people out there who still believe that we are not in a housing bubble? And well, as much as this may be a surprise to myself and you, yes. As a matter of fact, some of our quote-unquote experts of the housing market are actually forecasting that this growth in the housing market will continue on, while other sites have actually gone as far as to predict that the housing market in 2021 and along with 2022 will continue to see similar growth. Now guys, at this point in the video, this is where I want to hear your guys' thoughts and also your answers to questions 5 and 6. Because well, as much research I've done for this video, different experts I've talked to, along with having my own personal experience of owning a multi-million-dollar real estate portfolio, I would love to hear you guys' answers for questions 5 and 6. Speaking of which, question 5 is, are purchases being financed by high leverage? Question number 6 is, are people behaving economically as if this will last forever? Please leave your answers and your thoughts in the comments section below, because I would love to hear what you guys have to say. Because I do believe absolutely that purchases have been highly over leveraged, especially in response to what happened in 08 and 09 and fiscal policy and monetary policy wanting to see a full recovery in the market. I do believe this caused an extreme over leveraging in purchases, not only just in the housing market, but also in the commercial real estate market as well. And having said that, I also do believe there are investors and organizations out there that are economically behaving as if this is gonna last forever. And from a big picture standpoint, I actually do believe that this housing bubble is big, if not bigger, than what we saw in the years leading up to 2008. My only hope is that it just won't end up in a giant crash where it will lead to millions of Americans facing financial turmoil. Now, if you guys believe otherwise, let me know why in the comments section below, along with sharing this video, especially if you have a friend or a colleague that loves talking about this stuff as much as I do. Share this video with them because I would love to get their feedback and input in the comment section as well. And it also doesn't hurt our YouTube algorithm when you share things to your friends. Just saying. And per usual, thank you so much for watching this video. And guys, when I say thank you, I genuinely do mean thank you. I love the fact that I get to make videos about stuff that I personally geek out on, especially since it's videos for you guys. And well, it's something that I honestly look forward to every single week. So with that, please don't forget to share this video, like it, subscribe to our YouTube channel. And if you're feeling extra generous, please tap on that notification bell, as it does actually help our YouTube algorithm and getting these videos out to as many people as possible. So with that said, thank you guys so much for watching again. I'll see you guys in the next one.